All right. We'll get started now. We're going to get started. So my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. We're looking forward to giving you a bunch of information on how to find non-QM borrowers, who they are, and then how to market to them. I'll introduce our subject matter experts here in about another 30 seconds to a minute. This is a little different than our deep dive. Next week, we're doing a deep dive into debt service coverage ratio program. That'll be exactly a week from today. But today, we're going to talk about marketing and how to help you grow your business. So give it about another 30 seconds. We'll get started. Still people logging in. Hope everyone's having a great week. All right, give it about another 10 seconds. All right, everyone. Again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I want to welcome our two subject matter experts. I'm going to start on the West Coast first, Scotty. So, Eric, introduce yourself, please.
Hi, folks. My name's Eric Morgenson. I'm obsessed with marketing to the truly underserved marketplace out there. And with that, folks, you're going to be very optimistic moving forward about the industry that you've chosen, this mortgage industry, because now is the time to truly get rich on the niche.
Thank you. I always want to refer to Eric as Eric Morgenson. So thank you, Eric. And then on the East Coast, got Scott Gruebele, who I have the pleasure of working with every day. So Scotty, please introduce yourself.
Yeah, good afternoon, everybody. My name is Scott Gruebele. I'm an account executive here in Southern Florida with Angel Oak since 2016, and really looking to dive in today and share with you guys all the little tips and tricks on how to find a lot of these non-QM borrowers. There's a huge opportunity in the marketplace right now. As Eric said, this is still a very underserved community, and this is a great way to replace a lot of the lost volume that we have all seen in this industry from refinances and in certain cases purchases in certain markets. So looking forward to diving into it today.
Yeah, Scott, you just touched on a point that I just want to throw out a couple of stats here. You know, in 2021, the refi business was $2.6 trillion. Refi business, just refi. 2023, so we're talking just 2 years later, that is down to just almost 450 billion. That's a 500% decrease from 21 to 2023. So, you know, like Eric and Scott have both said, these are underserved borrowers, and we're going to hopefully inform you, educate you, and show you how to grow your business. So before we get started here, we're going to launch a poll, and hopefully everyone can participate in this. Poll. Okay, who has originated a non-QM loan in the last 12 months? So it's really eye-opening that usually the statistics come back like this. So given another couple seconds here, people voting, appreciate your participation. Wow, this is an aggressive audience. All right, so it's 50-50 is the, I know, Scott, you've been on a ton of these webinars. Eric, you also. This is a good group we have here today. It's 50-50. 50 have not, and 50 have originated a non-QM loan in the last 12 months. So Eric, Scott, you guys are doing your great job getting through to these loan officers. So it's usually 70 have not and 30 have. So this is really, really encouraging. So Eric, you know, we've got our website up here, but I'm going to pull up a PowerPoint, Eric, and just kind of cover, you know, who are these bank statement borrowers, if you don't mind, Eric? Hold on, let me get this.
Well,
let me know.
Who are the bank statement borrowers? Folks, it's anybody that you can keep up with W-2. Go
Eric,
ahead, John.
Can you see this PowerPoint?
Yes.
Okay, great. Go ahead, Eric.
Okay, like I was saying, it's anybody that's self-employed. You're tripping over them walking out your front door. It's the franchisee owner of the Subway you might go to. It's your dry cleaner. It's literally anybody. It's your mechanic, for the love of Pete. And here's the beauty of it. These folks have no idea these bank statement loans exist. There's the beauty of it. And with that said, you loan officers are dealing with self-employed people day in and day out when you're talking to a realtor. Realtors are the probably the how do I put this? The most common demographic of bank statement loan borrowers in America is that of real estate agents. My philosophy on that is they were the first ones introduced to bank statement loans, so they were the ones taking advantage of it. But folks, it's everybody you know that's self-employed that might still be renting.
Yeah, Eric, and to put a statistic behind that, Eric, 9% of the loans we close here at Angel Oak are for realtors. So it's pretty interesting. I'm going to cover this, and then Scott, we'll let you get into covering the highlights of the bank statement program. And I really love this graphic. In 2021, new business applications grew by 24.7% over 2020, right? We all know what happened in COVID. People left the workforce. They started their own business. And that was the largest increase in year over year in over 10 years. And then in 2022, new business applications grew by 22% over 2021. It's the largest, fastest growing segment of the workforce these days. So when you look at it like that, these are underserved borrowers. So Scotty, let's start talking about the bank statement program here. Let me pull that up. And just cover some highlights, Scott.
Absolutely. And to your point, John, the marketplace for these borrowers and for these loans, based on just those statistics alone, is growing exponentially. With today's type of economy, it's a gig economy. We all know many different people that are, in some cases, have a W-2 job. They might also do a little Uber on the side, a little Lyft on the side. Maybe they run an online store. Maybe they have a separate business, doing whatever it might be. Those are all borrowers that have the potential to qualify for the bank statement program. It's designed specifically for self-employed borrowers. Now, those self-employed borrowers don't need to be a business owner. They can be 1099, as Eric mentioned. They can even be Schedule C. So there's a lot of flexibility here. Our program goes up to 90% loan to value for primary residences. We can actually go to 85% on investment properties, and credit scores start for the program at 640. Currently, loan amounts go up to 3 million. So what you'll notice with a lot of our programs, specifically the bank statement program, is there is no jumbo. All of our programs go up, for the most part, to a 3 million loan amount. And we actually just made some changes today where we're bumping those loan amounts higher. We have the ability to do 12 or 24 months bank statements, which really helps, because at the end of the day, we're going to look at the entire picture. I usually like to tell my originators, get the 24 months, let us look at the entire picture, and then we're going to determine which is going to give us higher amount of income to qualify with, more buying power, if you will, the 12 months or the 24 months. In some cases, if the business is growing, the most recent 12 months will give us that extra buying power that we need to get the buyer into the property they're looking for. So there's an advantage there. Unlike conventional, our guidelines are much more relaxed when it comes to any bankruptcies, housing events, etc. It's only 2-year seasoning for a foreclosure, a short sale, a bankruptcy, or a deed in lieu. And one thing I'd like to add on that is, from the bankruptcy side of things, most of the bankruptcies we see today are Chapter 13s. Chapter 13s usually have a 3-year life. What we do that's a little bit unique is we base our seasoning off of the filing date on a Chapter 13, not the discharge date. So you could have had a Chapter 13 bankruptcy that was discharged yesterday, but filed 3 years ago, and that borrower would qualify on a bank statement program. Borrowers can own as little as 50% of a business if they are a business owner and still qualify using those business bank statements. But in the event you have a borrower that maybe is an investor and owns, pieces of numerous entities, or just a smaller piece of a business, we only require 25% ownership, and we can use personal bank statements for that particular borrower, which is what we do for our 1099 and our Schedule C borrowers. With the program, everything's on the table. So purchase, rate and term, cash out refis are all available. A lot of people don't realize that you can do cash out refis. For bank statement borrowers, you can. Something that's very unique to Angel Oak that I think is important for everybody to know is we only require 6 months seasoning on a cash out refi to use appraised value. So if you have an area that's grown in value, you have the ability there for the borrower to tap into some of that equity. We can do primaries, we can do second homes, we can do investments, as I mentioned earlier. And under the bank statement program, we do offer a 1099 only option. So this becomes very handy for the realtors. Let's take, for example, that example that we brought up earlier. A lot of times you'll have a realtor that might be set up in a way where they're getting paid their commissions into multiple bank accounts. Maybe they have a PA account and then they have a personal account, etc. And so what happens is, because their deposits are broken up into different bank accounts, we're not going to see a high amount of deposits on any one of those individual bank statements if we use them to qualify. So what we can do in turn is take their last year's 1099 or their last 2 years, if they had 2 good years, just like we would on a 12 or a 24-month bank statement program, and we'll calculate the income just using the big picture of what they earned for the entire year or years. That becomes really beneficial, and we can save a lot of loans using that feature as well. One cool feature that a lot of people don't realize, and I think it's very underutilized, is the 40-year interest-only option. Yep. So the program allows you to take a 40-year interest-only, whereby the first 10 years, the borrower will make interest-only payments, and then the loan will convert to a standard 30-year amortization. The beauty of it is that the rate that's locked in from day one is the rate that remains for the life of the loan. So if the borrower does graduate from the interest-only period to the standard amortization period, they don't have to worry about some adjustable rate or rate jumping on them or anything like that. Very cool feature. Highly recommend people look into that. As far as expense ratios are concerned, we use a general guideline, which is industry standard, a 50% expense ratio on business bank statements. However, for businesses where it makes sense, we can go down to a 15% expense ratio. So we can use up to 85% of the deposits for those types of businesses. Usually those are going to be, businesses operating out of a home that have minimal or no employees, service providers, etc. Now, and that pretty much covers most of the main features of the program. I would like to mention a couple of other things. We do allow non-permanent residents on this program, so that's a great feature. And the bank statement program is very flexible. It's diverse in the sense that you can have 2 borrowers, maybe one that's a W-2 borrower, another that's self-employed, and we can combine both incomes on this loan to qualify the loan. You can also have a borrower that maybe owns 2 separate businesses, completely independent of each other, and we can use the bank statements from each of those 2 businesses to qualify. So there's a lot of flexibility in this program to qualify your buyers.
Yeah, thanks, Scotty. Yeah, I got some questions coming in. I just want to do, this is being recorded. We will get this recorded out to you before end of day, probably by noon tomorrow. So just want to make sure everyone knows that. And today we're going to focus on how to find these borrowers, but we've got some great questions coming in here, so we're going to answer a lot of these questions. I'm going to start with Diane. She's got a bunch of questions. So Eric, for 1099, for her first question is, if they're 50% owner, Eric, how are you going to divide up those business bank statement deposits if their borrower is 50% owner of the business?
Well, thank you for the question. Folks, the biggest problem that people have with these bank statement loans is they overthink them. Here's how simplistic it is. The borrower owns 50% of the business, and there's $100,000 a month in average deposits. We're going to start with what? 50% of the deposits. It's really that simplistic.
No. Yeah, no. And Diane's second question, Eric, I think Eric froze up there a little bit. For a 1099 borrower, do you have to be with the same company for 2 years, Scott?
That's a great question. Yes, we are looking for the borrower to be 1099 from the same company for those 2 years when we're using that 1099 only feature. Now, in certain instances, we may be able to make some exceptions. As we like to say, John, what's the percentage of our loans that usually carry an exception?
30%.
30%. So let's take a realtor, for example, since we've been using that example. You have a realtor, they've been licensed and in the business for 10 years. They may recently have made a change to a different agency, but we can see the income is consistent. we can look at exceptions for situations like that.
Yeah, Julie has a question, Eric, about if you have to be owner. How long do you have to own your business for, Eric? We say we use 12 months of bank statements, but answer Julie's question about how long they have to own the business for.
Folks, we're looking for, on a bank statement loan, we're looking for your borrower to be self-employed for 2 years. How do we document that? If they're a sole proprietor, we just simply get a statement from a CPA stating that they've been in business for 2 or more years. It's really that simple. Now, we do have occasions where the borrower's W-2, but then the company that they're working for now decides to 1099 them. And they haven't been 1099 for quite 24 months. We've made exceptions on those because they're doing the same thing. Why not, you guys? We're at Angel Oak, we're putting on common sense goggles. We're looking at the entire picture of the loan, including if they've carried large loan sizes like this, or we're looking for every reason to make an exception on your loan. We love compensating factors.
Right. Yeah, so Scotty, there's a question here from Richard. For a 1099, do you still use a 50% expense ratio?
Hey, Richard. So that's another great question. No, we can actually on a 1099 go down as low as 15% expense ratio. So we can use 85% of the total income on that 1099. Very common for 1099 borrowers, because most of the times, realtors, we get a lot of insurance agents, for example. These are people that have very low overhead. In many times they're working from home. They don't have any employees. They have minimal expenses. So, we can go up to 85% of the income on that 1099.
Thank you, Scotty. And Eric, Lisa's asking here, do you have an expense ratio for personal bank statements?
Yes, we do, you guys. Personal bank statement loan, that borrower is still self-employed. All self-employed businesses have some form of expenses. If they didn't, you just go full doc, but they're writing everything off on their taxes, right? So yes, whether it be business or personal, we can utilize up to 85% of what they deposit into their personal checking account. See a lot of sole proprietors never got around to forming an LLC, a C, or an S corporation. That's fine. Also, there's certain communities out there, certain cultures that do not pay taxes. I'm talking cash and carry people. We are fine with cash deposits. Venmo, Zelle, doesn't matter as long as it fits the type of business that they're doing.
Yeah, but Eric, there's one caveat with that. If they do or show 2 months of business bank statements, we could use 100% of that personal bank statement deposit. So that's just another little caveat, and it's a lot of moving parts here. Anna's asking.
Real quick, John, let me add something.
Yeah.
So you guys, here's how this works. For you 50% that have never done a non-QM bank statement loan, contact one of your Angel Oak AEs and we'll walk you through how to originate these loans. It's very simplistic, but you just don't know what you don't know. When it comes to a bank statement loan here at Angel Oak, we're going to give you a full income and credit underwrite right up front, often same day, depending on when you give us the scenario. Now, we haven't disclosed to the borrower yet. Literally, we're simply structuring the loan for you, but a full income and credit underwrite right up front, so your borrower knows exactly how much of a house they can afford. Now, we haven't seen the appraisal, we haven't seen title, so it's not a full underwrite, but income and credit right up front, same day. You guys, it makes it very easy on you and your referral partner on a bank statement loan here at Angel Oak. And we massage these loans into a yes, meaning throw the scenario at us. In this pre-qual process, what we're going to do is we're going to structure the loan into a way where we can get a yes from the underwriter. We do that all up front.
Yeah, Eric, and I think that's critical. Scotty said like 7+ years. Eric's been here going on 9, 10 almost. So they know how to get a yes. So couple other quick questions, and then we'll jump into we'll talk where you can find these borrowers. I know Eric touched on it briefly earlier. If we don't get to your questions, we will have your account executive reach out and get your questions answered. So a couple other ones here. Scotty, and you mentioned this earlier, Scotty, mixing W-2 with self-employed, whether it's a spouse or even that borrower themselves. So
Yep, that's correct. That could be done for the same borrower in the gig type of economy worker I mentioned earlier, where they have a 9-to-5 W-2 position, but also run a business where maybe they're selling something online. We can use bank statement income as well as their W-2 income. And the same thing if it's spouse situation, husband, wife, one is self-employed, one is W-2. We can combine the incomes from both to qualify that loan.
And Steve, I know this was how to find non-QM borrowers. I get it. So we're gonna move in that direction. So I apologize. So I'm gonna pull up another slide, Eric, and you told us, where do you find these borrowers here? Let me know if you guys can see this one also. So Eric, help Steve say, where do you find these non-QM borrowers? Eric, you mentioned it a little bit. Just open your front door, walk out, you'll trip over them. Just highlight a few here, Eric.
Well, you're showing who are bank statement borrowers. Why don't you go to the other slide, John?
Oh, sorry. Sorry about that, Eric.
No worries.
Okay.
Here we go.
Yep, sorry.
Okay. So these are who are. Here's, you guys, anybody out there that knows a contractor, they're printing money right now. So I can go, anytime you need a license for something, that's public data. So a list of licensed contractors in each of your county is a very inexpensive list. Get on that list, contact these contractors and find out, number one, are they renting and would they like to buy a house? Normally, they're writing off everything and they don't even understand that they can qualify. Contractors are printing money right now. So you want to pivot to the next one?
Yep, there you go.
Okay. Now, look at this slide, everybody. Now, on this slide, you're going to see CPAs, tax people. Now, anybody that's self-employed uses an accountant. Rarely, the only people that are self-employed that don't use an accountant are accountants. So accountants have a database of self-employed clients who are making bank right now, who are renting a house for probably $10,000, maybe $20,000, $30,000. Neither does the CPA or that business owner understand that these bank statement loans even exist. So who's got a database of potential borrowers for you? Your own CPA. After this call, pick up your phone and call your CPA and schedule a coffee cupy with them, cup of coffee, or a lunch meeting, and explain to your CPA what you do as a profession, that these loans are ATR compliant. That's very important to let the CPA know, because all of their clients have a 3-year statute of limitation to be able to sue their lender, that's Angel Oak in this relationship, for their inability to repay their primary or their secondary mortgage. So once a CPA learns, wait a minute, you mean my client is in the driver's seat when it comes to if they can't afford the loan? This isn't like stated income or alt income like what happened in the financial meltdown. Wait a minute, that's a bit of a game changer. And now they want to look like a hero, because what is a CPA's favorite tax deduction? Favorite in the world, the mortgage interest tax deduction. That is a CPA's favorite angle with self-employed clients who are renting. Folks, connect the dots here. That's how simple it is. Now, stick with me. Can you imagine having 2, maybe 3, maybe even 4 good CPAs referring all of their wealthy self-employed clients to you for their residential home purchasing over the next year or two, maybe 3 years, what's that going to do to your personal checking account? Folks, it's really that easy. Be the first to get to the CPAs, because what a great referral source. Can you imagine my CPA saying, Eric, you want to buy that house? You got to call Scott. And I'm going to call Scott. You think I'm going to start grinding him on rate? No. Scott could potentially help me buy that dream house, which we all know home purchasing is very emotional. Folks, connect the dots on this one.
Yeah, Eric, we always say this, and I'll add it to here is, when you use bank statements to qualify a borrower, you are increasing that borrower's purchasing power probably at least 2, maybe 3 or 4 or 5 times. So, who's going to be happy if you tell your borrower, hey, you originally came in looking for a $300,000 house, and now you can buy a $600,000 house? You think your referral partner is going to be a little happier about that, right? So.
And if I can add here, John, so as Eric said, CPAs have historically been the best source of referrals for self-employed borrowers and bank statement borrowers for non-QM loans. Historically, a lot of my originators that have had the most success usually are in with 1, 2, maybe 3 CPAs that are kicking those deals over to them, because those CPAs can also refer to their clients to them for cash out refis as well, or a lot of them are looking to purchase investment properties because the CPAs will recommend this to them for their tax benefits and write-offs through the by purchasing investment properties. So they're great sources. But I also want to add, you see LinkedIn here. So LinkedIn is a great resource because if you guys upgrade to the premium version of LinkedIn, they usually give you a free trial for a month, but it doesn't cost much. You can begin to do a lot of deep searches where you can find business owners in your area, in your zip code, your sphere, where you might want to market to. So I highly recommend that. And obviously you're going to see all about their business and their profiles on LinkedIn and be able to go directly to the decision makers or the owners. Social media. A lot of my originators have had a lot of success just basically posting directly to business owners. Are you a business owner? Are you an independent contractor? Are you a sole proprietor? If so, you're looking to purchase a home, please reach out. And you can start to list some of the different benefits. Did you know that we can qualify you for a loan based on the cash flow coming into your business, into your bank statements? That captures a lot of attention. I have a lot of originators having a lot of success using LinkedIn, Instagram, Facebook, etc. And then networking groups. I saw a statistic that I think it's somewhere around 70% of the members in most networking groups are usually self-employed in some form. They are the business owners, or they may be 1099 Schedule C type of individuals, realtors. We see a lot of people in the sales profession who are usually considered self-employed. So getting involved in a lot of those networking groups is another way to rub elbows with a lot of self-employed borrowers, and you'll start to maybe do some of the networking group's members' loans. And once that gets rolling, there is a huge referral-based community within self-employed borrowers. Self-employed people usually know and hang out with other self-employed business owners, etc. So just tapping into the market is also going to organically begin to generate a lot of that business. And then at the end of the day, you could always go a little bit old school and really in your community, walk in, head to a strip mall. If you know of a successful restaurant that you frequent, if you know of a successful, barbershop that you frequent, head in there and just have a conversation with the owner, drop off your information.
Yeah, and we're going to show you some tools on our website that you guys can use for how much does it cost them, Eric? Zero. All right. So we're going to show you those tools. We're going to get there in a minute. Scott, let's talk about. We're going to talk a little bit on our DSCR program, but we're also going to also share with you tips and tricks on how to use that debt service coverage ratio program to help you market to get more business. So, Scott, you want to just highlight some of the stats here?
Absolutely. So, as you can see here, this slide is basically showing the opportunity available for investment properties. Most of the people on this call probably know it. 34% of the homes out there today are rental properties. 70% of those homes are owned by individuals, not big corporations. There's still a lot of properties out there owned by individuals. There's still 42% of renters that are living in single family homes. So, there's a huge market there rent-wise for people that are needing to rent properties. And 44 million is the number of US households that rent their home. That speaks to the market that's available there for you. So what does that tell you? The debt service coverage, DSCR loan, debt service coverage ratio program, we like to call it the investor cash flow, can help you find and generate more non-QM borrowers with a few different features. First and foremost, anybody that's looking to purchase an investment property, the DSCR opens the door immediately. It doesn't matter what they do for a living. It doesn't matter what their income is. This person can be a firefighter, a police officer, a barber. It really doesn't matter, because we're not looking at income and we're not looking at employment. We're strictly qualifying them based on the rental income that that property generates. So your market, guys, when it comes to how do I find borrowers for DSCR loans, your market is basically anybody and everybody that you know and can come in contact with because of that feature. We're going to use that rent, we're going to offset the payment, the borrower qualifies, assuming they have the down payment. The second portion of that is anybody you've ever done a loan for in your past, your entire database, your entire portfolio, if they own an investment property, they can cash out on that investment property using a DSCR loan to take advantage and purchase another investment property. Same goes for yourself, your primary borrowers. If you have anybody, even if you've done them conventionally, again, they purchased a property conventionally, primary residence, they want to purchase another investment property, whether it be short-term rentals or long-term rentals, you can get them qualified using the DSCR loan. And lastly, kind of circling back to those CPAs, the DSCR program allows you to close in an LLC. You can take vesting and title in the name of an LLC. That brings all of those tax benefits. So the CPAs are another good referral source for these types of loans.
Yeah, Eric, just I'm going to cut back here and just cover some of the highlights, Eric, of DSCR. And we'll just cover in highlights, and then we'll get back to where Scotty was going with this.
You have bank statement. There it is, John. There it is. Folks,
yep.
There is no debt to income ratio whatsoever. Your borrower can have, I don't know, 7 different car payments, 120 grand in credit card debt. There's no debt to income ratio whatsoever on these. Unlimited amount of finance properties under this. So you guys, here's a funny thing about our marketplace has changed dramatically, since last July, but the appetite for people that, for these investors that want rental property, boy, it has not slowed down at all. Actually, it's increased. And you think, oh my gosh, prices are so high right now. No, that's not slowing them down either. How about, oh, the rates are getting so high now? That doesn't slow them down either. Why? The interest rate on an investment property is 100% tax deductible. On our owner occupied or secondary properties, it's only deductible to whatever our tax bracket is. But these rates, these payments are 100% deductible. And it's not a bad bet investing into US residential real estate now, is it, folks? Now, anybody out there that is only licensed in a single state, but you stumble upon one of these loans, I don't know, let's just say in Oklahoma, let's say Washington, Colorado's a great state. We allow you guys to do these loans in states that you might not be NMLS licensed in. Another way to make money. Has anybody out there ever done an Airbnb or a VRBO? Guess what? The owner of that house buys investment property. Wouldn't that be a fun conversation to have? Hey, I stayed in your house. I thought it was great. I gave you like a 5-star rating. Hey, are you interested in buying any other property? Because I can facilitate that. Folks, these loans you're going to stumble over these if you start getting creative. Get the liar out of between your ears that this is a hard market to work in, and get creative and manifest, oh my gosh, look at all these little nuggets of opportunities in the mortgage industry. Because we all have a front row seat of brokers that are doing quite well in this market right now because of their mindset. So folks, don't get in your own way. Jump in the pool on these non-qualified loans, because these borrowers, you're going to trip over them everywhere.
Yeah, thank you, Eric. It's so true. And Scotty, you started touching on, where to find these. These are very similar to that self-employed borrower. They're entrepreneurs. So, Scotty, talk about just, you mentioned CPAs. Talk about, oh no, so those are, here we go. There you go. Where do you find these cash flow borrowers?
Yep. So obviously your agents, your referral sources, your realtors are going to be great sources, not just from the standard referral of somebody looking to purchase an investment property, but getting with your realtor and saying, hey, let's sit down and maybe go back to your database of anybody you've sold a property to, primary or investment, because we can reach out to them and ask them if they're interested in purchasing another investment property and show them how they can qualify for that investment property using the DSCR program. A lot of people sometimes think, oh, well, I'm not going to qualify because, my income only says this, or whatever the case may be. Again, we're not looking at income. We're not looking at employment. You're not even putting it on your 1003. So, anybody can basically qualify to purchase an investment property using this program. Other loan originators are also going to be sources, especially if they work for large banks and credit unions, because they don't have access to these programs. So if they have, people coming in, customers coming in, asking to purchase an investment, they see that they don't qualify, they're going to be a great referral source for you guys to kick that buyer over to you guys, because you're going to be able to get them done. I've had a lot of my originators have success with hard money lenders. A lot of hard money lenders, as we all know, are writing 6-month balloon or 1-year balloon type mortgages. For the hard money lender, they're in the business of putting out their money for a short period of time at a high interest rate with points up front, and then getting liquid on that money. So they need to refinance those people out of those hard money loans, and putting them into a DSCR loan is perfect for all parties. Hard money lender gets paid off, borrower gets put into a traditional loan that is much, much more friendly in terms of interest rate and has much less fees involved, no longer has to worry about that balloon. CPAs, tax preparers, not going to touch on that too much. We've kind of gone over that. But financial planners and wealth advisors are also a great source. If anybody out there works with any of those directly, or knows anybody who is one, they can usually refer a lot of their clients to you guys that want to invest in real estate to diversify their portfolio out of maybe securities. Same goes for your real estate investment clubs. A lot of them are out there, just kind of like the networking groups we discussed, that you guys can just jump into and meet a lot of investors instantly, just like that, online with the online communities or the actual physical clubs. And then last but not least, you can always go into your old school lead providers. Reach out, maybe buy a list of leads of anybody who's purchased an investment property in the last 12 or 24 months, and reach out to those guys. Hey, would you like to tap into the equity in the investment property you bought back on, March of 2020 to purchase some other investment properties? There's a way we can do it regardless of what your income is. And then social media. I love social media as a marketing tool. Anybody that follows me sees I put a lot of information out there on social media. It's a great way to reach out to a huge audience of people, and you never know who out there is seeing your message.
Yeah, Scott, we did an account executive here in Dallas, Fort Worth, did just a search for real estate investment clubs. Googled real estate investment club, and I think he had about 15 to 20 groups all over the Metroplex. It was that easy. I mean, so yeah, and Jordan, we are going to get to our portal where we're going to show you all these tools that you have advantage. We talk about serving an underserved borrower. These are underutilized tools. So let's jump right into that, Eric.
Real quick, I want to drop a nugget on everybody.
Sure.
We're all seeing commercials regarding ERC, Employee Retention Credit. The government is doling out $1.2 trillion to business owners that kept employees. They can get up to $26,000 per employee, right? So we all see these ERC ones. If you Google Employee Retention Credit, contact one of these companies that are doling out hundreds of thousands of dollars to business owners. Contact them for their database, and with all of that money, they can go buy investment properties because they're awash in cash that's non-taxable from our government. That is quite the nugget right there.
Yeah, you're so on there, Eric. It's really crazy. So from our homepage, you're just going to log in. Now you do need to be an approved broker with Angel Oak to get access to these marketing materials. So just let everyone know that. But Eric, let's talk about, we've been talking about how to find these borrowers. Who are these borrowers? Let's talk about, let everyone know on this call all the tools we have in our tool chest to help them grow their business. Eric, let's start with flyers, please.
John, do me a favor, go to the bank statement flyer.
Sure, yes, sir.
Okay, here's my favorite tactic. And if anybody's ever seen me present before, you've seen me do this. What I'm going to do is I'm going to take this roll of Scotch tape and I'm going to turn it into $10,000. Now, how am I going to do that? Well, what I'm going to do is I'm going to take this bank statement flyer and I'm going to go and get 30 to 50 of them printed out. Then I'm going to put it in a folder, and that folder is going to be in my car along with this roll of Scotch tape. And anytime I'm going to the gym, or say I'm running an errand, or I'm going anywhere during business hours, I'm going to be passing by real estate offices. What I'm going to do is I'm going to pull into the parking lot of that real estate office, and I'm going to, again, get the liar out of my head that says, oh, Eric, you're not dressed up enough to go into that office, or Eric, don't go into that real estate office. They have an in-house lender, or whatever the liar is telling me. I'm going to snap out of it. I'm going to get out of my car. I'm going to walk right into that real estate office. I'm going to smile at some realtors, introduce myself, but I'm going to beeline to their kitchen, and I'm going to tape that bank statement flyer right to the refrigerator door in their break room that they open to get their cream, to get their lunch. I'm going to tape it right on the refrigerator. Now, for a realtor, you want to be top of mind. When they have a self-employed client and they see there's your contact information on this bank statement flyer, they're self-employed, you want to be top of mind. That's how our business works. Top of mind, timing's everything. And if you're really gritty, hang on, you're going to take that flyer, you're going to go into the bathroom that those realtors use, and you're going to tape that flyer on the back of the bathroom stall door. Now, you'll have a captured audience. Whenever you start getting calls and you hear a bit of an echo, you know your marketing's working. Now, maybe 10% of the folks that are listening to me right now are actually going to do this. You 10% is who I'm looking at, because you have written goals down. You have financial goals that you want to hit. You might not know how you're going to get there, but you know you have a North Star, a goal that you want, and this is going to be an easy tactic for you. And how do I know it works? I do it myself.
That's great, Eric. Yeah, guys, I mean, so when Eric, this is just one of the flyers we have. We have all of them, and you can see someone already, Pete Connor Hancock, has already filled that out. That fills out for every flyer, for every program, for every scenario we have. You can do this for the CPA. You can do it anything you want on every program. It's there for you. And once you fill it out once, like I said, it populates all the flyers for you. Again, I get a little annoyed because this is all free. It's been created for you. It is so underutilized. It's not even funny. Scotty, let's take us to, Scott, you do a great job with social media. Let's talk about the social media posts we have, sorry.
Yeah, so what we've done here is we've designed a post, both an image as well as some pre-canned verbiage for any of our approved brokers to use to market on their social media pages, whether they're marketing directly to borrowers or to referral sources. So when you talk about how to find these loans, this is a great way. You can literally say, okay, I want to put a post out today about the bank statement program. Take any of these images that you want to work with, and then say, okay, I'm going to make this post for borrowers. And you're going to post, you can copy paste this verbiage directly here for borrowers, slap it right underneath the photo, edit it however you want, put out a post today. You can follow that up with just about any program we offer. Tomorrow, you might want to post that same program to a realtor. So you scroll down a little bit and you'll see you have bank statement images, as well as verbiage that is pre-canned and designed to market this program to realtors. We have one of these for every program we offer: DSCR, cash out refi, asset qualifier, platinum jumbo, and of course the bank statement program. Again, this is free 99 to every approved broker with Angel Oak. It's the most underutilized tools in the game, in my opinion. The flyers that Eric just went over, he just went over a couple of great ways to put them out there, but we talked about going to CPAs. We talked about stopping in some of your local businesses, strip malls, etc. You have those flyers ready to go. Hey, here's a little information about this bank statement program we offer. Know you're the business owner here. Here's how we can get you qualified on purchasing a property, or if you're looking to purchase a property.
Yeah, Scott, great information. Diane's asking a really, really great question. Diane, with those flyers, those don't say anything about Angel Oak. You put your brand, your logo, your image. I've seen loan officers co-brand them with a realtor and have it at an open house. So that's just some information, but that was a great question. And Travis on here, he loves using our flyers. Travis, I'd love for you to reach out to me and share some of your success stories with either your AE or me. I'll share my email address at the end here. And everything is here in our portal. So Eric, talk about, which I think is probably everything's inside the portal. Everything's underneath this marketing portal. Eric, talk about what I think is one of the most powerful presentations. I know you do a ton of them. Scotty does a ton of them. That's why you guys are so successful at what you do, and that's why your LOs are successful at what they do. So Eric, talk about the realtor presentation.
Well, you guys, we have a national presence. We're nationwide, and we have talented AEs that you guys can leverage to come in and co-present to realtors, or you can go lone wolf. We've already made these decks for you, and literally just getting the word out that these programs exist. Now, I've been at this for 10 years doing bank statement loans here at Angel Oak, and I'm still surprised on how little, let's just say, the marketplace needs education on these. And those of you that are out there educating realtors about these programs and the niches within the niches of these programs are going to be the most successful. These presentations are a great way to get the word out to realtors, and let your Angel Oak AE come in and co-present. We can field any question. We don't come with any Angel Oak business cards or anything. You can refer to us as product specialists when you're presenting in front of a room of realtors. But leverage your Angel Oak AE to help you educate the real estate market on these programs.
Yeah, Eric, what do you charge to do a realtor presentation?
Well, here's a funny little story. Anytime, this doesn't cost anything, but anytime you bring in an Angel Oak account executive to co-present, if you can get us in front of 15 or more realtors, I'm going to bet you that one of those realtors, after you're done presenting, is going to come up to you and want one of these loans for themselves, either a bank statement loan or a DSCR loan. Often they're going to say, I've got a client that you guys, I couldn't get approved over here or there. Would you have a look at it? Now you're starting to look at scenarios for these realtors. You guys, it works. It simply works. Get comfortable being out of your comfort zone. If you're not used to presenting in front of realtors, go out there and just do it. And it's amazing how good you get after a few of them, then start making it rain.
Yeah, Eric, when we do these, we don't say anything about Angel Oak. I kind of jokingly say I go in there on your behalf like I'm in the witness protection program. I don't say anything about my name. I'm just I'll use, Deborah has a great question here, Scott. I'm going to ask you to answer regarding a contention about rates. But I go in there, I just say I'm one of Deborah's investors, and that's all I say. And I go through these programs, and everything gets directed back towards Deborah. So when you get a self-employed borrower, after we've just informed you who and how to get these borrowers, you're going to call Deborah. After debt service covered, you're going to call Deborah. And everything goes back to Deborah. It's the most powerful presentation. And if you get 12 realtors in a room, We said 9% of the loans we close are actually realtors. You will get, like Eric said, you will get one of their loans. So question here, Scotty, for you, great info. Deborah says great info. Can you share your personal pitch when a client asks or complains about the rates on these programs, Scott?
Sure. That's an easy one. It really also depends on the time we're in the market. For example, as of this moment today, little known fact, non-QM Angel Oaks investment property loans and second homes are actually pricing better than conventional. Yep, in a lot of LTVs. A lot of the buckets you price out there, I get these calls every single day saying, wait a second, I want to make sure this is right. I've priced you guys out. You guys are coming up priced better than what I'm getting conventionally. Might be the same rate, but on the conventional side, you're paying a discount of $5,000, and with us, it's a par rate. So those are easy conversations. But generally speaking, to answer your question directly, in a normal environment, a non-QM rate is going to be, I don't know, maybe about a half a point higher than what you're looking at conventionally. But keep in mind one thing. If a borrower is doing a non-QM loan, it is because they cannot qualify for a conventional loan. They don't have any other option. If they're looking for financing, this is the only option. So that is usually a fact that makes it very easy to get over any questions when it comes to rates when your buyer or your borrower is comparing it to a conventional rate. The answer is simple. Mr. Borrower, if I could get you into that conventional rate, I would, because that would be the path of least resistance. But unfortunately, you don't have the qualifications for a conventional loan. So non-QM is our best option at this point, and this is what the pricing looks like there. We find, especially on the bank statement program, that we get very little pushback from borrowers and buyers, much less than most people would expect, because a lot of them are savvy and they understand. I can't not pay Uncle Sam and then go out there and try and get financing and get the best interest rate possible. They know how it works.
If you don't mind, was it Lynn, John, that asked the question?
It was Deborah that asked the question.
Deborah, here's my approach, just like Scott's. Now, anytime you write a check for your mortgage, do you ever write the interest rate on the check, or do you write the payment? We're in a business, folks, that we don't sell rate, we sell payment. Now, the interest rate, let's say it's, oh my gosh, 9%. How am I going to call out a 9% rate when I've been calling out a 3% rate over the last 6 years? Here's the thing. If you wouldn't take a 9% rate, it's going to be hard for you to sell a 9% rate. Flat out, folks, that's how it works. However, what interest rate are you paying when you're renting? I know, 100%. So 100% interest rate is a lot worse than a 9%. And by the way, go into a graph on interest rates in America starting in 1979 to right now. A 9% rate is a bargain compared to the 18% interest rates back in 1980. Oh, and by the way, people were still buying houses back then. So could the rates go to 18? Don't know. However, Mr. Borrower, you get to write off that 9%. So let's say they're in a 40% tax bracket. Well, they're writing 40% of that 9% off. What's their effective rate? Now it's only 5% versus the 100% if they're renting. Folks, we're in a go market right now. You need to educate them that the mortgage tax deduction coupled with, guess what? We're not going to see a correction in real estate. It's going to keep going up because we have a supply and demand issue right now, plus the ATR issue where people are not going to be defaulting because they can't afford their mortgage. Plus, when interest rates do come down a little bit, possibly in the fourth quarter, when interest rates come down, what do you think that's going to do to the value of real estate? It's going to go up. Talk to Barry Habib. So folks, we're not in a business where we're selling rate. We're selling payment. We're selling the fact that they can get into that house. Folks, it's time to marry the house, but date the rate, because there's no prepay on any of this.
Yeah, so Jennifer says, anything over an 80% loan to value, you're not paying mortgage insurance on ours. That's one loan, no MI. So that's a great point, Jennifer. Thank you for bringing that up. And Carlton, I'm going to give my email address, John, John, @angeloakms.com. So that's ANGELOAKMS.com. So Eric, while you're hot, give us a closing statement here, Eric.
Well, guys, we just scratched on yet a few ways to get the word out and a few ways to find these type of borrowers. But we didn't even touch in upon, let's call it life event leads. What's a life event? A life event is going to trigger the need for a realtor, the need for a loan officer, or the need for both. What's a life event? Somebody filing for divorce. What's a life event? I don't know, somebody passing away in a property. I know it sounds morbid, but it's going to trigger, again, the need for a realtor, a loan officer, or both. It's a life event, filing for bankruptcy. What about what Scott talked about? What about monitoring a neighborhood, and you would know every house that filed for bankruptcy, Chapter 13, let's say 2 years ago. Now they're sitting on a ton of equity, and yet they can't get to it because everybody tells them no. Angel Oak is 1 day out of a Chapter 13 if they filed it 2 years ago. So how about contacting those folks saying, hey, you've got a ton of equity in your property. Would you like to access any of it just coming out of a bankruptcy? And I'm willing to bet 50% are going to say, heck yes. So we didn't even touch upon any of this.
Yeah.
Reach out to your Angel Oak AE, reach out to me. Let me help you literally find borrowers because they're still everywhere. Don't believe the liar that's telling you this market's too hard. It's not.
Yeah. And Scotty, anything in closing?
Yeah, I'd like to thank everybody for taking the time out to participate with us today. I hope everybody learned a lot and got some nuggets. As Eric said earlier, I'll say it again, don't overthink it, guys. It really, a lot of the sources we gave you, it's that easy. What we have found is they're more than happy to help because they're looking to recommend and add value to their customers and their clients. So you are a resource to them to be able to offer this type of service. Do not discount the organic growth you can get out of simply tapping in to some of these self-employed borrowers. So you really just need to get your foot in the door, and then you will see a lot of the growth internally, whether it be from the investment community or self-employed borrowers. And reach out to your local account executive. We're here to help you every step of the way. We can brainstorm, we can put ideas together, we can do presentations together, whether it be to realtors or maybe just the general public. We're here to help out any way we can to generate that business. And as you can see, we offer all of the marketing tools, 100% customizable to be in your name to be able to do those events. So reach out to us, we're here to help.
Yeah, so thank you, Scott. Thank you, Eric. I appreciate your time. Thank you, everyone, for participating. This is being
spent the time.
What's that? Yeah, this is being recorded. We will get this out to you before end of day tomorrow. We will get the slides out too. I had a couple of questions regarding those. Again, my email address is johnj@angeloakms.com. And there's a short survey. Excuse me. There's a short survey afterwards. If you could take that, give us some feedback, things we could do better. But I will tell you this: when you work with people like Scott and Eric and all of our other account executives across the country, you are working with the best of the best. So take advantage of us to help you grow your business, finish 2023 strong, and go into 2024 kicking butt. So for those of you that have worked with us, thank you for your business. For those, give us the opportunity. We'll definitely knock your socks off. So everyone, have a great day.
Thank you, Scott.
Thank you, Scotty. Thank you, Eric. Love working with you guys. Have a great afternoon.
Great afternoon, everybody. Thank you.